Hello everyone, welcome back to the new YouTube video. In this video, we'll talk about the very fundamental concepts of trading. Very fundamental, like how the price moves, right? The phase of price. We know uh, there are four type of price, like how price moves actually: retracement, reversal, consolidation, expansion. You know all of this. Let's get to the next slide. Yeah, the phase of price. It is also called the IPTA market cycles. IPTA stands for interbank price delivery algorithm, right? This cycle represents constant state of movement inside the market, which are again expansion, retracements, consolidations, reversals. Okay, so each phase of price signals what might come next, giving us confluence to trade. Right. Let's get to the next slide. Let's talk about consolidations first. Right. So consolidations happens when price builds low resistance liquidity run, or also known as failure swings on both sides of a range, right? Not taking the external high or external low, right? And then just leave failure swings at those points, right? This is typically how you uh, get to know a consolidation, that we are in a consolidation, right? This happens when price have a lack of direction, right? The price don't know where to go, right? Why this happens? When we have when we hit a higher time frame objective, for example, then yeah, the price is done, right? Uh, the objective has been met, so yeah, we can expect a consolidation after hitting a higher time frame objective. It commonly appears before high impact news. You will see that a lot of times whenever we have a high impact news, you will see typically consolidation prior to that. Okay. If trading consolidation, we want either side of a range to get taken before entering new phase of price. In simple meaning, you are not going to trade away from failure swings, right? If you want to trade a consolidation paired with an expansion, right? So you want that external high or low to get taken first before entering any trades. This is what a consolidation looks like, right? We leave failure swings above, failure swings below, right? Not taking out the external high, external. We just leave failure swings behind for just price to then trade back into and then reverse again, right? So yeah, this is the expansion phase when you trade it, right? But this is the consolidation phase. Let's talk about expansions, right? The phase of price where price aggressively moves in one direction. Expansion happens after a consolidation phase, after retracement phase, right? You can expect an expansion in a consolidation phase, right, or a retracement phase, because they both are just a continuation signature for price to go higher or lower, depends on whatever you're trading. Expansion happens inside a reversal phase. What do I mean by that? We expand to a key level and then we expand away, right? So a reversal phase, expansion happens inside a reversal phase. Okay. While expansion, I want opposing candles to support price toward IRL to ERL, meaning from a fair value gap towards external high or low, ERL to IRL from external low or high towards a fair value gap, from ERL to ERL from an external low or high towards the external low or high, which also known as order pairing ranges. Maybe you guys are familiar with that. Typically happens after a manipulation, right? After taking out constellation highs or lows, the same thing that I talked in the previous slide, right? You want to pair this expansion when we take out, when we manipulate all when we manipulate to that relevant low or high, right? In this case, it's a relevant low. We manipulate that, and we then trade an expansion, right? We will not trade an expansion if we leave failure swings below. Ideally, I look for SMT if this low is not taken, right? Okay, so this is what an expansion looks like. This represents a daily candle, right? And this represents the hourly candles inside this one daily candle, right? So in an expansion candle on a lower time frame, it looks like this, right? So I want all of these uh, order blocks or opposing candles to be respected toward the objective, right? Objective can be external high or fair value gap or something else, right? So in an expansion phase, I want a shallow retracement. I don't want a deep as retracements, right? I want a shallow retracement, and then these opposing candles support price higher and higher in a bullish scenario. Let's talk about retracements. Retracements occur within an expansion phase. As I told you before, retracement is a continuation signature, right? When you are trading the expansion, you will see a retracement where you can, pair up yourself to then trade the expansion higher. This phase gives opportunity to traders to align themselves in a trend, right? Swing formation. Okay. This phase of price at retracement, it's actually what I trade day in day out. Right? I wait for that retracement. I wait for that swing to form. Then I trade away from that level, right? So I'm typically waiting for a retracement to then trade an expansion pair with that, right? So it's just a continuation signature, right? You pair yourself within that expansion phase, waiting for a retracement to form that swing point. Retracement happens inside an expansion phase towards the fair value gap, order blocks, swing highs and lows to give an opportunity, right? A retracement can happen inside these three levels, right? I can expect a retracement towards the fair value gap, towards the order block if there is no fair value gap, or take out a swing high or low within that range to give me that opportunity, to give me that swing point. From that I can trade away from. Retracement leave failure swings behind to price to trade back into. When we retrace into a fair value gap or something, we leave failure swings behind, right? For then to price to trade toward those levels, right? This is this is what our retracements look like. Okay, this is an expansion candle, which is a weekly expansion candle, right? And this is a lower time frame, like a 4 hour chart. And let's talk about retracement into this, right? For example, this is the open, right? We open low first, we are trading higher, right? If I want to align myself within this expansion to move higher, right? I will not trade like for within the next candle, right? I'll wait for uh, any key level to hit to form that reversal into that area, right? To form that, right? So I will wait for that retracement first and the swing point, and then I can trade away from the level, right? And these are the failure swings that I was talking about, right? It leaves failure swings behind for price to then trade back into, right? And yeah, these are just the retracements. These are 1, 2, 3, 4. These are just the retracement, that swing point that I talked about, right? That I wait for them to form and then trade away from the level, right? These three consecutive candles, I will not, like for these two consecutive candles, I will not align myself within these, right? I'll align myself within the C2, C3, or yeah, very rare scenario. I'm trading a C4 candle, right? But yeah, I'm trading away from that swing point towards a draw. There will be a draw, uh, and yeah, these are the retracements that I'll wait within an expansion candle to then trade toward the higher time frame objective. Let's talk about reversals. Yeah, the simple definition of a reversal is expansion met with expansion, right? When we expand into a key level and then we expand away, right? A key level can be anything. Okay, can be confirmed by SSD on lower time frame. You can confirm a reversal or paired with the lower time frame order block closure. Reversal happens when price expand into a key level to then expand into the opposite direction, which is also known as V shape, right? We expand into a key level and we expand away, right? And the key levels are again fair value gap, order blocks, swing highs and lows, right? Those are the sweet spot to get a reversal. Ideally look for SMT there, right? For making it high probability SMT or PSP. Okay. There is something called AMD reversal, right? It happens when price hit the key level, but it doesn't reverse immediately. Like for example, it's just gone in a consolidation. So we just wait for a manipulation of those consolidation lows or highs to then trade a reversal, right? Which is also called the accumulation manipulation distribution type of a reversal. This is what a reversal looks like, right? Yeah, this is your range high, this is your range low, right? The range low is the key level that I want to frame the reversal from. We expand into that key level and then we expand away, right? This is the V-shape signature, the reversal signature that I talked about. Again, these are the things that you should know as a trader, there what you can expect from price and what you can't expect from price. Okay, so what price can or cannot do? First of all, price can go from consolidation to expansion, like we saw in the consolidation example. We can expect an expansion when we are in a consolidation, right? Price can go from expansion to a retracement when we expand and didn't hit a key level, right? For example, didn't hit the objective. So yeah, you can expect a retracement to move toward those higher time frame objectives, right? Price can go from expansion to a reversal, like we saw in the previous slide. We expand into a key level, then we expand away. Yeah, so price can go from expansion to a reversal, that V-shaped signature that I just talked about. Price can go from expansion to a consolidation whenever we expand into a key level, or for example, or hit the higher time frame objective. Price have a lack of direction, so I can expect a consolidation. Or rare scenario, like if we have a higher time frame objective above as well, so we can, yeah, uh, expect a retracement for further expansion to those key levels on higher time frames. Price can go from price cannot go from consolidation to a retracement. When we are in a consolidation, we leave failure things behind, right? It doesn't mean that we're going to retrace into something, right? When we are trading a consolidation, we wait for external high or low to get taken. Yeah, so we cannot expect retracement inside a consolidation phase, right? So price cannot go from consolidation to reversal. Again, for reversal to occur, we must expand into that key level first for then to expand away, right? We cannot pair reversal with the consolidation. Yeah, we can expect a consolidation to the expansion, not a reversal. Yeah, it's a little note for you guys. Every phase of price starts and end with an expansion. We start the phase of price with an expansion and end it with the expansion, right? We in between you will get to see consolidation, retracement, reversals, or whatsoever, right? Reversal is also the expansion. Okay. So yeah, thanks for going through this PDF. Thanks for going to this YouTube video. I hope it adds some value, right? Comment, share if you want to see something else. Yeah, peace out.